Okay. So what did we go over on Tuesday? Anybody give me some of the sections, titles, just summary concepts, what we went over on Tuesday, first class?
Yeah, we were basically just talking about the differences between financial accounting and managerial accounting. We were talking about planning, budget, controlling, and basically what are the main differences between financial and managerial.
Okay, good. So we started off from what Andrew said at the beginning, differences between financial and managerial accounting. And then we went on to introduce very briefly what Introduction to Managerial Accounting course is about. Remember, now we're not providing information to external users. We're shifting our focus to, as a managerial accountant, to summarize information for the purpose of helping management level for them to make decisions on planning, controlling, budgeting, evaluating performance. So, and then we went on to talk about some of the trends in nowadays business world. Remember, JIT, quality management. We're selling things online, e-commerce. Right? Information systems has helped nowadays business a lot. So we briefly went over ethical standards that basically management accountants has to abide by when they make decisions, when they face different ethical dilemmas. And then the last portion of the class, we went on to talk about briefly what unit cost is. We started off from service type of business. This is the very last part of the class we went over. Service companies, they do not have inventory. They provide time, skills, knowledge to customers. Could be insurance company, wireless company. Here are some examples. Basically, these type of business, if we want to calculate unit cost per service, what we need to do is add up all the operating expenses and then divide it by the total cases, meaning the total number of customers. Okay, so this was the first example of calculating unit cost for the first type of business we're covering here, service company. Okay, so this is an income statement that you already learned in financial accounting course. We have revenues on top, we have expenses listed. These are the costs of doing business, costs of providing services to customers. We add them up, divided by the total number of customers that we dealt with in this entire accounting period to figure out what is the unit cost per service. Okay, so here's an example providing e-learning services to 1,950 customers. In total, the cost is $3,900 to do your business. So we divide these two numbers to get $2 per e-learning services. Okay, so this is the idea of calculating unit cost. The reason why we care about cost is because we need to mark up a price as revenue, as retail price. And the company is generating the differences, the profit, between those two prices. Right? If we charge each customer $5, and we're getting per customer, the profit is $3, right, for doing business for them. So management level, they need to know the detailed breakdown of the cost, and they need to know how to set the sales revenue, set the retail price in order to gain profit, but also to increase your sales with customers. So this is the first type of business we went over, and then we introduced to you an example. This is an example of a haircut business. So in total, they had 230 clients. Sales revenue in this period, $2,200. And all the costs, detailed breakdown of different types of expenses. The first question we went over in this example was the operating income, which is the difference between revenue and all the cost. Right? So operating income is $3,015 in this example. Second question was, what is the unit cost per service? So for all these haircut services to 230 clients, what is the cost of doing business with one client? $9.50, yes. So that will be adding up all the costs and then divided by unit, which is customers, 230. Okay, now there was a slight error here. Last time I showed the slide. I don't know if some of you wrote down your vision here. Over here, last time it showed 3,000 something. Okay, so just change it to $9.50. Right, there's a slight error here last time when I showed the slide. business we went over last time, and today we're continuing this topic, calculating unit cost, but not for service anymore. We're focusing on merchandising business and manufacturing businesses. For these businesses, they're not providing their time, their skills, and knowledge to customers in general. They're providing actual inventory, actual products to generate profit. For example, grocery stores falls under this category, ShopRite, Kmart, all the malls you go to. Generally speaking, they don't produce their own products, but they purchase the finished goods from wholesaler or vendor. So the cost for them to do business mainly comes from the cost of the goods, the cost of the inventory that they're purchasing. So for these type of business, we want to know the unit cost per product. We first of all need to know how to calculate cost of goods sold. And so we stopped right here last time. Introduced you what is merchandising companies, where they generate profit from purchasing inventory from wholesaler and then resell it to their own customer. The differences between the price they purchase the product and the price they sell out to customer. That's how they make a profit. We want to calculate unit cost per product. We need to first of all determine cost of goods sold. Now this breakdown of cost of goods sold is shown from periodic inventory system. Remember, perpetual system, we continuously update the cost of goods sold level. I want to go back to this periodic system because so you have a better understanding of where did this cost of goods sold actually come from. Okay, so remember last time I gave an example. It's very simple. So let's say last period at the end, we have beginning inventory $1,000. And this entire year we made new purchases, let's say additional $1,000 of inventory from vendor. Based on purchasing these $1,000, let's say we incurred $100 freight charges. So altogether, $2,100. This is the total cost of inventory that is available for us to provide to customers. But now, can that match with cost of goods sold? Probably not. Depends on how many products we actually sell out to customer, right? So we compare this available for sale $2,100 against whatever is left at the end of this year, December 31st. So if there's only, let's say, $100 worth of inventory left, that means we actually sold out $2,000 worth of inventory. Okay? If there's 500 left, then we sold out 1,600. So we add up beginning inventory, which is the same amount that you got from last year's income statement, last year's statement's ending inventory. Sorry, last year's balance sheet ending inventory. Then you plus the new purchases, plus freight charges. This is the total available for sale inventory cost. Minus ending inventory, you will get the cost of the inventory you actually sell to customer in this period. This is the first step of reaching unit cost. So after we get this, let's say we actually sold out 10,000 number of products. So if we have the cost of the products in total, we have the total number, total units of products, we will be able to calculate the actual unit cost per product. Okay, so what I mean by this, we'll come back to this a little bit later. Just jump to here. So once we get cost of goods sold, we divide it by the total number of products to determine unit cost per item. Okay, so that's what this calculation is all about. We want to know the total cost of the goods we sell to customer, and to determine unit cost per item, we divide it by the total items. Just like earlier, we calculated total operating expenses for service company, then we divide it by clients, customers. Merchandising business, the unit would be products. few slides. Okay, left down from. So we separate the cost of that relates to inventory from operating expenses. And another way to say operating expenses is period costs. Okay, so remember in multi-step income statement, we usually list all the inventory costs related in the first section. So the upper part before gross profit, that purple arrow over there. Before gross profit, we list all the costs related to inventory, which is the same calculation process as I shown here on the whiteboard. This is the middle section of multi-step income statement. The reason why we separate this cost of goods sold from all the remaining expenses is because if you look at the number, usually cost of goods sold is the largest cost category. All the other expenses is also cost for doing business, but not the cost related to the product itself. In order to get gross profit, the $75,100, calculate the cost of the goods we sell out to customer. As the first part, we get to gross profit. Then we calculate, we take care of all the remaining operating expenses. Okay, so this is the usual step for putting together an income statement. And also for managers to understand with a large category of cost, how much are we spending over there, how much are we gaining after subtracting cost of goods sold. Then we take care of all the remaining operating expenses, which breaks down to selling expenses, administrative expenses. Remember, those expenses incurred in the offices. Could be utility, rent, people you hire in the office, people you hire to help you sell your product. Those all falls under operating expenses. Okay, but we first of all calculate cost of goods sold. That's the first step. Then we can get gross profit. So gross profit is solely related to the profit after subtracting cost of inventory. Okay, so in this chapter, we learn another term of calculating operating expenses is called period cost. In managerial accounting, we want to separate. We specifically want to focus on separating inventory cost from period cost. Why? Because later on when we introduce to you manufacturing company, it's a lot more complicated than merchandising company. When inventory cost is not just a simple number of purchases, not just beginning inventory and freight charges, but since manufacturing company actually produce their products, they have a production line, so we actually have to go back to trace what's the materials cost, what's the labor cost, what's the other indirect cost incurred. All of this, after calculating and summarizing it, then it gets to cost of goods sold. Okay, but again, for manufacturing company, of course, we still have employees that helps us sell the product, we still have administrative offices, but those are the costs that falls under period cost. The multi-step income statement, the first section is always inventoriable cost, which is the largest cost of doing business that relates to inventory. And then the remaining supporting costs, operating expenses. Okay, now inventory cost, remember, inventory is an asset account. Right? When we purchase inventory from our vendor, it's considered inventory asset when we journalize it. The debit side increase. Only until we sell it to customer, that's the time inventory turns into cost of goods sold expense. Okay, so we're trying to calculate cost of goods sold expense, which is after the fact of selling the items to customers. So don't get confused. The first step when we purchase in the inventory is an asset account, and then when we sell to customer, it turns into cost of goods sold expense. Right? Same for manufacturing companies. Manufacture the items, and at the end, finally, we have finished goods. Later on, we'll talk about this in more detail. At this step, it's still inventory. It's still an asset for our business. Only until we sell out to customer, after the fact, we do the statements, cost of goods sold, this is a portion of the inventory that turns into expense. Okay? Right. Talked about this, statements. Now let's move on to an example. Yes?
Can you go back to unit cost per product for just 1 second?
Sure.
Okay.
So again, this slide, what it's trying to represent here is after calculating cost of goods sold in our merchandising business, We want to determine the retail price per product. We want to determine whether we should cut the cost from certain sections or not. We need to first of all know what is the cost incurred and how is it assigned to each and every product. This is the average cost per item. We add up the total cost of goods sold divided by the total items sold to customer. Okay, ready for an exercise? Okay, this company tells us that we have many different types of expenses. We have inventory here, and it's kind of mixed together, the information. And at the end, what we're going to get to is the cost of goods sold. Okay, this is a merchandising business, not service type, so we actually do have inventory. Let's say after a whole year of selling the products, this is the information given to you. So how would you calculate cost of goods sold in this? And to see if you can calculate this, I'll go over it with you in a minute. And pass around the attendance sheets and make sure you sign in. To the back.
Is it 44,900?
Sounds hard. Just to me. How did you get it?
I used the formula. So 7,900 plus 39,000 plus 2,900.
My charges, purchases, beginning inventory, and
Minus 4,000.
minus ending inventory, 2,900, right? Okay, so let's take a look. It's $44,900 is the cost of goods sold at the end. The total cost incurred for selling the product that relates to inventory. Okay, here we're not talking about operating expenses, just solely focusing on cost of the goods, the inventory. So the cost of the inventory that you purchase, and then cost of the inventory that you sell to customers. Okay, so very good. You have beginning inventory, $7,900. You have new purchases, $39,000. Freight charges, that comes together with purchases, $2,900, and then we minus ending inventory, tells us is $4,900. So this gives us at the end $4,900. Now, what if I add to this question? Let's say this cost of goods sold amount is for selling 100 items. So what would be the unit cost then? $449 per unit, right? So this is for 100 units, then again, $449 per product. This is the cost, not the retail price. The cost of selling the product, the cost incurred when you purchase this item in. Okay, any questions before we move on to the manufacturing side? Let's take a look at the last section here in this chapter. We want to understand more about another type of business, manufacturing, which is quite different from service and merchandising because this This is the type of business that actually produces, assemble their own product, and then sell it to the consumer. So cost-wise, it's a lot more detailed, a lot more comprehensive than service business and merchandising businesses. So first of all, since they are producing your product, definitely you have to purchase raw materials. So you have raw materials, cost incurred first, and you obviously need to hire people, workers to help you assemble the product, put together everything, then you have finished goods. So this is the general process, okay, very general, and then we're going to break it down to more detailed costing categories. So first of all, we have materials that we have to purchase before we produce the products. After materials, we also need to hire people, we need to purchase equipment, we need to rent a place for the production line. Everything put together, and then we have finished goods ready for sale to customer. Okay, so the differences here is for merchandising companies, we're only taking care of this section. We just directly purchase finished goods from the vendors, from suppliers, and then we just sell it to our customer. For merchandising business, it goes back to raw materials, to people you hire, other machines that you purchased, and then you get finished goods. Okay, so we're going to take a look at the detailed categories in each section here. Before determining cost of goods sold, you first need to know what is the cost incurred for example, materials, labor, indirect materials, indirect labor. Okay, now, in managerial accounting, we want to understand more detailed categories of cost, not just a lump sum category cost of goods sold. We trace it back to each cost object. So what cost object refers to is simply product. We trace the cost to the product, and we classify these costs into the ones that are closely related to the product, ones that are less closely related to the product. Okay, so the ones that are easily traceable to a particular product is what we call direct costs category, which then breaks down to direct material, direct labor. Ones that are not as closely linked to the product, although it's still a cost that incurred, it's called indirect cost. And then we break that down into indirect materials, indirect labor. And another term for indirect costs is manufacturing overhead. Okay, so those two terms are used interchangeably. When you see the homework assignments, you see indirect costs, think of it as manufacturing overhead, or vice versa. Right, so what does it mean? So let's say if my company is producing vehicles, bikes, motorcycles, hopefully also cars. Let's say for bikes, what are the things that you would think is direct, that you would think are direct materials for bikes? Wheels, frame, metals, steel, chain, handles, paddles, all these things that actually are physical parts of the product is what we call direct materials. Meaning when you look at the product, those things that you, probably most of the things that you can see by your eye from the product is called direct materials. Okay? Another example, let's say I open up a bakery. I need to hire chefs, baker, but the direct materials that help me fix or actually bake apple pie, cakes, flour, direct materials. Sugar, definitely. Flour, sugar, eggs, it's apple pie, apple, different fruits, blueberries. These are all the direct materials that help me help me produce the actual product, and I can keep in my eyes. So these are direct materials for bakeries. Okay, now what about direct labor? Direct labor refers to labor cost, which means wages, salary. So for vehicle company, manufacturing site, if you hire employees, workers that physically help you to assemble the product, the cost, wages that you're paying them, falls under this category, direct labor. Okay? Bakery will be the baker, chef, only those people that help you produce the product. Okay? Now we're making a very clear cut between inventoriable cost and administrative and selling costs. So here, direct labor, we're not talking about people that you hire to help you sell the product, the people you hire to help you assemble the product. Okay, so those people you hire, and then administrative offices and selling your product, those fall under operating expenses. Those are period costs. Now we're just focusing on manufacturing costs, inventoriable costs, and the costs incurred to help you actually generate and produce the product. Okay, so direct labor only refers to the workers in the manufacturing site, in the factory. Yes?
So say like you work for a car manufacturing plant and they own the delivery service where they just deliver the cars to, like would that be considered direct labor or indirect? If they're not technically making the car?
Delivery will be considered operating expenses then. Okay, so on the sales side, because if you're delivering the products, delivering the materials, then that's considered. If it's materials, it's still considered on the manufacturing side. But if the delivery truck is for products itself, finished goods, for selling purposes, then it falls under operating expenses. Okay? All right, so this is the, yeah.
Can you give an example of the indirect labor?
I'm going to go into this. So the first category I just talked about is direct costs. Those things you can see by your eyes in the product, main parts of it, and the people you hire to help you assemble the product. Indirect costs, indirect materials, let's say you're producing DVDs, CD sets, the case, the actual CD itself, the intellectual property, the singer's work, everything goes into direct materials. But the labels could be considered indirect materials. So meaning there's a professional judgment here just to classify them into the ones that are more important than the other costs. Okay, that would be one example. Other, let's say, going back to the bakery example again, indirect materials could be if the customer order a birthday cake. So things you decorate on the birthday cake. It still goes together with a finished product, but compared against flour, eggs, sugar, it's less important, it's more minor. Okay, so here we're just classifying it into main costs and minor costs. Not saying these are not important. They're still part of the product. It's just considered the importance, the relevancy with the product itself. We classify it into direct ones and indirect ones. Okay? Indirect labor, to give an example, that would be perhaps janitor's salary. The janitor you hire to help you clean up the factory. That can't easily be traced to one particular line of business, one particular product, because the manufacturing side is for multiple products. So those janitor's salary, the entire management's salary for the entire plant is considered indirect labor, meaning it cannot be directly traced to one particular product. The salary incurred is for multiple products. They clean up the entire site. Management level, they oversee the entire site. So it's not traceable to one particular cake, one particular bicycle that they produce. Okay? These are all the costs incurred, and we're just separating them into main and minor. Yes?
Yeah, so is there any actual way to classify indirect materials? Like specific way to separate?
Specific terminology and definition will be here. Okay, so mainly, there are some of them you might find it a little bit more confusing, and to be honest, some of the companies may classify it different from others, but you would see the main parts of the actual product. Those are usually considered direct costs, main costs. All the others, the things that you decorate on it, the labels, those things also come together with the product, but not as important compared to the actual steel, the wheel, handle the bicycle. Right? So perhaps the ring bell is not considered exactly important. You would probably add it on unless the customer requests it. That would be considered indirect cost. Okay? They're all part of the cost. We're just separating them into the main ones and the minor ones. That's all. Okay? So generally speaking, for manufacturing company, the costs, before we calculate cost of goods sold, we separate all the incurred costs into three main categories. Direct material, again, those that are physically a part of the product. Direct labor, people you hire to help you assemble the product, to help you bake the cake, bake the pie. Manufacturing overhead, the category that involves actually consists of all the other indirect costs. Lump sum it together, call it manufacturing overhead. To be more specific, we can actually also classify into indirect material, indirect labor. So again, one example could be janitor's salary, indirect labor, since it cleans up the entire manufacturing site, not just an area for one particular product. Manager's salary for the entire factory, they oversee the entire business production line, also is considered indirect cost. Other indirect costs, repair and maintenance for those machines you see in the factory that produces multiple lines of businesses, products, utility, rent, insurance, all these costs incurred that helps the production side but can't easily be traced to one specific product. We consider them in the third category, manufacturing overhead. Okay, so this is the first step. When you look at a problem, first step would be determining which cost falls under which category. Direct ones, direct material, direct labor, people that actually assemble the product, physical portions of the product, and then all the remaining costs, indirect ones. And they can't easily be traced to one product. There's another term you have to know, conversion cost. So this is not anything new. We still classify the cost here. It's just that the second category and the third category, we combine them together. There's another term to call these costs, which we call it conversion cost. So meaning everything other than the cost of raw materials. Because raw materials is a thing not yet converted into products. And we hire people, which incur direct costs, direct labor costs, and we have maintenance, machines altogether, manufacturing overhead costs to help us convert raw materials into finished goods, which is why we consider those 2 and 3 categories, second and the third category together as converting costs, conversion costs. Convert raw material into finished goods. Okay, so just in case you see problems, what is the conversion cost for this company? And you know you have to add up direct materials with all the manufacturing overhead costs. Basically, everything without raw materials is conversion cost. Okay, I'll take a closer look at manufacturing overhead. I actually went over some of the examples already. And the main 2 subcategories in indirect cost, manufacturing overhead, which is the third cost here. You can also break it down to indirect materials, indirect labor. So this is just giving you 4 examples here. I actually already talked about this. Is the label of the DVD, the CDs, the products could be considered minor costs compared with the case and the disc itself. This is an example of indirect material. Indirect labor, plant managers, maintenance, their wages is considered indirect labor cost because they can't be easily traced to one particular product. They're supporting the entire manufacturing site. Understanding how to classify the costs, now we're going to go into numbers. Okay? So we're going to actually calculate what is the exact number of direct materials used, and then what is the number of wages, the amount of wages we pay off to workers, what is the incurred manufacturing overhead cost. Add them together, this factors in the finished goods cost. And then we compare finished goods against whatever is left in the warehouse at year end. Get a cost of goods sold for manufacturing company. This is the first step, classifying the costs. Now let's go into more details on actually how to set the numbers and calculate the cost of goods sold. So this is a summary of what we talked about. We have direct cost, we have indirect cost. Direct cost breaks down to materials, labor. Indirect cost also breaks down to materials, labor, and all the others, maintenance, utility, only for a manufacturing site. Okay, once again, we're not calculating operating expenses. Delivery expenses, rental utilities for administrative offices, that belongs to the remaining section of the multi-step income statement. And we're just looking at the upper part, cost of goods sold part. Okay, so let's take a look at this statement here. It looks pretty much the same as merchandising company statement besides which part? Besides that middle section that I highlighted here, right? And specifically, the second line over there, the third line, cost of goods manufactured. You would not see this for service business or merchandising business. And it has a star sign asterisk over there. We're going to break down that part into details in the second slideshow here. But this is a summary of all the information. The middle part is the cost of goods sold, which is the very last portion here. Okay, so this is just showing you up front what it looks like after, at year end, after producing products. Income statement will look like this. And the differences between this and merchandising companies, the middle part, cost of goods manufactured, then those are the products that we actually produce. It's not the products that we purchase from a vendor or purchase from other third parties. Take a look at a detailed breakdown how we got to that $650,000 cost of goods manufactured. This is what we just talked about, different types of cost. The first section, what is this about? Direct materials. Okay, so we want to know what is the number, the amount, what is the value of the direct materials we used at year end. To calculate that $355,000 at the end, we need to trace back to, first of all, last year's statement. Do we have direct materials left over from last year? Do we?
Yeah.
We have $70,000 direct materials left from last year, and we can still use in this year. Do we make new purchases? Yes. How much is that? $350,000. $350,000. And already including freight, right? Mm-hmm. Yes. So the total, if we add those two numbers up, just a summary, we have $420,000 worth of materials for us to start the production line. So at the end, after a whole year of production, what do we have left? We have $65,000 of direct materials inventory that is left over from this year after producing many different lines of products. Okay, so we have $65,000 left. So we get the actual number of material that we use in this year. Based on adding these two up minus this, we get $350,000. Okay, this is the first part, manufacturing cost calculation. First step, what is the direct materials used? What is it worth? $355,000. So now remember, we still have two more categories. We have direct labor. We also have all the other indirect costs. Direct labor tells us here we paid employees $116,900. We move this number over here to the second category. Since we want to get to cost of goods manufactured, we need to add up these three categories. Okay, so this 355 that we just did, we add direct labor. This is the first category of costs. Direct labor is second category. Now what about the third category? Indirect costs, and this includes a lot of different categories, but basically we have, first of all, indirect materials. Remember, from the cake, the decoration, the labels, minor costs compared to the major ones. Indirect labor, remember janitors' wages, plant managers' wages can directly be traced to one product, $28,000. We also have depreciation expense on machines to help us produce the products. $10,000. We have utility, insurance, property taxes, $18,000. Altogether, these are indirect cost category, which is how much? Total overhead? Total will be $73,000, right? This is the third category, the cost that incurred in this manufacturing company this year. So these are the newly incurred costs. What about the leftover from the beginning? Meaning that we may have already manufactured all the goods last year, but it's also possible when it reaches December 31st, we have some of the products that are just halfway done. Those are the products that we call the first line, beginning work in process inventory. Okay, so we have $80,000 worth of inventory that are not yet finished goods. We still need to consider them in because we may have this year completed those products and we have already sold it to customer. So beginning work in process, we have last year's halfway done products that were worth $80,000. We purchased new materials and we actually used $355,000. Hire people, paid them salary, under $69,000, and all the remaining indirect costs that relates to utility, rent, janitor's wages, altogether $73,000. These numbers, these four numbers, together forms total manufacturing costs incurred during the year, $97,000. Before comparing it against what is the leftover halfway done product. So altogether, these $97,000. This is not yet the cost of goods actually finished.
It's 597 or 97? 500?
Oh, sorry, 597. Thank you. $597,000, and we compare it against ending work in process inventory. Meaning that this year, just like last year we have halfway done inventory. This year we may also have some of the inventory that are not yet fully done, not ready for customer yet. So we need to subtract that in order to get the finished goods cost. So cost of goods manufactured basically means the finished goods costs incurred in this period. These are the costs of the inventory that are now ready for customer, $650,000. So we subtract ending work in process, and will be $27,000, and at the end, we should be able to get cost of goods manufactured, $650,000. So these are the goods that are finished, ready for customer. Okay, let's step back a little. So we first talked about different types of costs. There's direct costs, direct material, direct labor, indirect costs, indirect material, indirect labor, and all the other rental utilities. Then when we calculate, before we get to cost of goods sold, we need to know what is the total amount of direct materials used. What is it worth? So we trace back to last year's statement. We have the beginning direct materials carried over from last year that were worth $70,000. We made new purchases of materials. $350,000 with freight charges. Add them together, those are the total direct materials available for us to use, but then we still have leftover this year end, meaning we didn't actually use the whole set of it. So altogether, we actually used $355,000 worth of inventory, worth of materials. Carry this over to calculate what is the finished goods cost, because this is only one part of it. This is the first category of cost. We still have direct labor to consider. $169,000 of wages paid to employees. Indirect costs, which breaks down to indirect material, indirect labor, utility, rental, all together, this gives us $73,000. So these are the three main types of costs. And we look back at the statement, last year we have some of the halfway done inventory we need to consider. Halfway done worth $80,000. Add them together. We might have already manufactured all of them, but in reality, if we match it with the statement, we see ending work in process. We still have halfway done other products that are worth $27,000. So altogether, the finished goods that we actually manufactured this year were worth $650,000. Okay, so what's the next step? Is this cost of goods sold yet? the cost of goods that we produce, right? How do we know whether it's cost of goods sold? This is finished, meaning, yeah, this is finished, but how do we know if this is the number that we actually sold out to the customer?
And the inventory?
Yeah, it's like you're ending inventory, you end up with that selling to the
Oh, we end up-
manufacturer.
What's the leftover ones, right? And again, don't forget, we also have beginning inventory to consider. Okay, now before we go to this, let's just do an example, a quick exercise here. I want to make sure we're on the same page. Let's try to compute direct materials, first category of cost based on these information. And you just need to use the ones that are relevant to the materials. Those that are not, just leave it out. Again, try to tell me how you get to this.
You take 4,000 plus 6,400 plus 200 minus the ending.
Ending. Okay, good. That sounds right. We use beginning inventory first, $4,000. This is carried on from last year, the leftover materials from last period. We made new purchases, $6,400. And then it comes with freight charges, $200. And we compare those numbers, the available materials against what's left at the end of the year, which will give us the total direct materials used, $91 worth of direct materials. So the logic here really is the same as when we calculate cost of goods sold for a merchandising business. The general logic is the same. We need to know last year's level, this year's new purchases, compare it against this year's leftover, determine what's used in this period. So the same logic we apply here, direct materials, beginning inventory that we can use. We made new purchases, we have to pay freight charges, compare against ending inventory, $1,500. So we actually used $9,100 worth of direct materials. Any questions so far? Now let's move on. Just a summary of what we talked about so far. We start the production side from materials inventory, reduce them. While producing them, they're in the work in process. Okay? Until it is completely done, then it's considered finished good inventory, which is what we calculated here, $650,000. So raw materials is this $350,000. Work in process, remember there's some of them halfway done from last year, and then we produced more. So at the end, in total, we have finished goods that were $650,000. So then this finished goods, remember this is inventory, this is asset for now. Until we sell it to customer, then it becomes cost of goods sold expense. And how do we get profit from this? Compare cost against sales. Okay. We can get operating income after subtracting all the other administrative offices, general expenses, then we can get operating income. Start from materials, calculated materials cost, work in process, actually producing the products, and then calculate what is the value of finished goods. Finished goods, then we sell it to customer, and that becomes cost of goods sold, the amount that we sell to customer. And so the right-hand side links to financial accounting. What we're trying to focus on in managerial accounting right now is the production side of the cost. And this part, you already learned logic in financial accounting, getting the profit. And in those courses, in that course, we directly give you cost of goods sold amount. Okay? And you just have to compare it against sales. But now we're determining what is the cost of the product. How do we get there? So again, another term for operating expenses is period cost. So these two terms are used interchangeably. So if you see these in homework problems, make sure you understand these two terms mean the same. Manufacturing overhead and indirect cost, interchangeable terms. Period cost, operating expenses, interchangeable terms. Continue the example that I gave earlier. Say we're here, we've already determined direct materials costs, factored in all the other direct labor, indirect costs. Tells us that we already completed the goods, which cost $650,000. This is the finished goods that we manufactured in this period. Okay? Now, if we want to determine the actual cost of goods sold to customer, we would need the information of beginning finished goods. We may have some of the finished goods carried out from last period. Then we transfer this $650,000 here. So let's say, assuming beginning inventory is $5,000 worth of inventory. We have newly produced products that were at $650,000. And now ending inventory, assuming also $5,000. Let's say just $1,000. What would be cost of goods sold then? It would be $5,000 plus $650,000, right? And then we minus $1,000 left. Finished goods, what we haven't sold to customer, when we sell to customer, minus this 1,000, so meaning we're having Yes. $654,000. Okay. So this is not cost of goods sold yet. This is just the cost of the goods that we manufactured. And then we add in any beginning finished goods that we had in last period, minus whatever is left that we haven't sold to customer. This will give us the actual cost of goods that we sold to customer this year. So this will be a complete process of getting to cost of goods sold. Start from classifying the costs, calculate direct materials used, other costs, add them together with work in process, compare it against ending work in process, we're not yet done, those inventory, and we can get the actual cost of the goods that we produced and we finished. Transfer this to compare it against ending inventory, add in beginning inventory, and we can get the cost of goods sold. Okay, so what I just talked about is exactly what's shown here on the slide. Three main categories of costs. We have three main sections of process to get to cost of goods sold. Direct materials, transfer into work in process, add in two more categories of cost, determine the cost of finished goods, then we can determine, compare these goods, add in beginning inventory, compare it against ending inventory levels to determine the cost of goods that we actually sold to customers. Okay, any questions on this flow chart, types of the costs so far what we covered? No questions. So you all understand that? Okay, another summary and then we'll work on more exercises. This summary is about different types of companies that we covered. Remember, we started off from a service company that does not have any types of inventory, provides skills, knowledge, time to customers, different types of services. So the actual cost of doing their business is the salaries, the people they hire, depreciation on furniture, desks, but not inventory costs. Okay? Second type of business we cover is a merchandising company. We do have inventory costs, but they actually purchase finished goods, then they mark up the price and sell it to customer. So the cost would be the price they pay the vendor, the price they pay the supplier. Okay? Of course, they also have operating expenses. They need to hire people to help sell the products. We have rental expenses, utility expenses, just like service company. And so those costs, again, operating expenses is also called variable cost. Third section here, our main focus here is calculating the cost for manufacturing company, which is more complicated. We break it down into three main categories: direct materials, direct labor, manufacturing overhead. Another way to say this, indirect cost. And we also have other minor costs incurred, utility, rental, specifically for the manufacturing site. At the same time, when we get to selling the finished goods, we also have operating expenses incurred. There's delivery expenses that we talked about earlier, depreciation on administrative offices, furniture, desks. It's the same as service company and merchandising. Okay, so just going to break down these costs into two categories so you can see exactly what we're trying to focus here. Today, we're focusing on this area. For financial accounting, you learned about a lot about operating expenses and how to do statements, how to list them. Today, we're just focusing on how to classify the cost, how to calculate cost of goods sold for manufacturing company. Okay, let's take a look at another exercise problem. How do we calculate cost of goods manufactured? Not cost of goods sold, cost of goods manufactured that we produced, not yet selling to customers. So choose the information that you think is helpful to calculate this number. one, when we calculate cost of goods sold, when we calculate direct materials, we always look back what's left last period. And it's very important, you don't want to miss those. Because those are still useful in this period, we're still using it. Okay, so you carry on $7,000, add in the three categories of costs that we talked about today, direct materials, direct labor, manufacturing overhead. Then we have, add them up so far as the total cost incurred, total cost that we can actually use to produce into finished goods. So then, when it comes to December 31st, we have $5,000 worth of inventory that are not yet ready for customer. So we minus those, and we get $45,000 of completed goods that are finished. Cost of goods manufactured. Questions on this? We've got some of these problems for our first assignment, which is not due until the following week, not next week, probably not next week. Some of these questions asking you to generate a statement of cost of goods manufactured. Definitely will give you some information on these categories, just like how we did in these exercises. We just put them together in the statement, part of it, calculate what it's asking. Right, if there's no problem on this, let's go over some of the multiple choice questions. Everybody will see some multiple choice questions on exams. Let's try to do this one here. Which one is not a characteristic of managerial accounting information? Remember, compared to financial. Not a characteristic. A. Why? External. Right. It's a key term over here. External information is for people who does not work in the business, outsiders, investors, creditors. We're learning how to provide information as management accountant to management level internal users. Okay. So detailed information about individual part of the company, that's managerial accounting report. Emphasize relevance. Of course, information has to be relevant to the actual production site. On the future because we need to do budgeting. Okay. Today's business environment characterized by features. All of the above. Global competition is very important. Time factor for doing business is very important. How quickly you can sell your products to customers, and the quicker you can get profit. Okay. Shift toward a service economy. This is also one of the features in nowadays business compared to 20 and 30 years ago. So it's all of that. Now, next one, which of the following accounts does the manufacturing company has but not a service? Should be obvious. Cost of goods sold. Service company doesn't have inventory. We don't produce our own products, we don't purchase products from others. So service company only provides skills, knowledge, time, so they do not have cost of goods sold. All the others, advertising expense, payroll, definitely hire people, we advertise, market your product, retain earnings. What is retain earnings? Earnings after expenses of everything. After income statement, right? Transfer to retain earnings. Retain earnings is maintain earnings in the business. Okay? Has to be a positive number, otherwise your company is a red flag over there. Okay? Now, computing the cost of goods sold, which of the following is the manufacturer's equivalent to merchandiser's purchases? This one is a little tricky. First of all, purchases, remember purchases, what I showed over here, we have beginning inventory and we have purchases. Then we have freight charges, ending inventory, then we get cost of goods sold for merchandising business. So what this question is asking you is, what is the equivalent of purchases using manufacturers?
right here, what's here? Use.
Direct material is a part of it.
Cost of goods manufactured.
It's the cost of goods manufactured here. What is the equivalent? We're looking at the end, how we get to cost of goods sold. Remember, we're calculating cost of goods sold here. The second line, new purchases items, for merchandising business, we purchase in from vendors. For manufacturing business, we manufacture products. This is the equivalent category to purchases. Instead of purchasing it, we're actually producing it. So this is a cost of produced finished goods. Okay, direct materials is only part of it. Total manufacturing cost to account for still is only part of it, not considering ending work in process yet. Total manufacturing costs incurred during the period, again, is here. Total manufacturing costs incurred during the period. Yes, that's not considered the ending part either, the ending work in process. That's the category that appears in the middle here. Which of the following is the direct cost of manufacturing the sport boat?
See, cost.
Cost of the boat engine. You can actually see this as a part of the product. So what's wrong with the others?
Customer hotline,
We're on the
service side, the customer representative.
So administrative offices is more related to that, operating expenses. Depreciation on plant and equipment. This is still manufacturing cost since it's on plant and equipment, but it's indirect cost, overhead, yes. Salary of the engineer who arranges plan and layout. There's indirect cost, indirect labor, since it can be traced to one particular item. Okay, very good. So this one's cost of the engine. So the following is not part of manufacturing overhead for producing a computer. Not part of it.
Depreciation fees.
Depreciation on delivery trucks, and we actually talked about this earlier. Delivery trucks for products is on the sales side, it's on the operating expenses side. So we're just focusing on manufacturing costs under manufacturing overhead category. Okay. The last two questions, you see a table here, very similar to the exercises we did. Again, how would you calculate direct materials? What will be the number?
Is it B?
Did B, how do you get B? Start from,
Okay, purchases of direct materials, not plus beginning materials inventory, minus ending materials inventory.
so purchases, we have $95,000, and beginning we have
8,000.
8,000, and then we have what?
Minus 7,000.
Minus ending material, 7,000, so you got $96,000. Exactly. Direct materials used. Again, the same logic, you trace back to last year, if there's anything left, new purchases, add them together, those are available direct materials. And compare it against ending inventory, ending direct materials. Keep this number, you need this number for the next question. You have direct materials, $96,000, and then continuing on that, how do we calculate cost of goods manufactured? Again, this mark, finished goods cost. 30,000 in materials,
Materials, and then, what was it, 30,000 direct labor,
direct labor, and
and then manufacturing overhead
manufacturing overhead, 21,000.
minus,
At the end?
Yeah, which is 3,000.
Work in process, finished, $3,000. $4,000 beginning, plus the three categories of cost: direct materials, direct labors, indirect costs, add them together, compared against what's left not yet completed. Not yet fully manufactured, still halfway done. After calculating that, you get $148,000. Okay, so again, this is not cost of goods sold, this is the cost of finished goods manufactured. So to get cost of goods sold, again, you need to transfer this number over here. This is the cost of goods manufactured. Add any finished goods from last year, minus the ones that you haven't sold to customer, and will give you the amount that you actually sell to customers